Hi, this is Kerry Artag with Wicked Stocks, bringing you your daily Tesla report for Monday, July 1st, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I will start with the big picture, and that is this chart here. Weekly bar chart, by the way, goes back over 4 years, 4.5 years plus. But we have a 1-year bear structure, a descending channel top at 209.96. That does define this lower low, lower high dynamic that has played out over the last year. This is a July 23 high. So yes, over the last year, 209.96, if tested over the next 3 to 5 days, 3 to 5 weeks, what have you, can contain buying quite possibly through the rest of the year, and below which, or once tested, we can fall away through the rest of the year into the lower 100s perhaps within 3 to 5 months of testing it. And we're coming close to testing it. And that is the big picture. So let me take you now to kind of the 2 to 3 week dynamic. And that is the fact that we've tested meaningful weekly resistance now. We are right there right now. We have a horizontal channel top at 198.17 and a 3/8 upside Fibonacci that is longer term over the last year from the July high against the April low of this year, 200.11. Now, we pushed through that area, of course, on Friday, the 203.20 high, and we backed off. We closed just below the channel top. So this is still an area that you can say is holding and may well contain weekly buying pressures. And from here, we can, over the next, I'm going to go 2 to 3 weeks out, and then I'll go kind of 3 to 5 days out. Over the next 2 to 3 weeks, we can fall to 168.75. So you can see that here, in the support and resistance area, that holding below that 198.17 to 200.11 region will keep, channel support at 168.75 in reach as a 2 to 3 week target. Now our 3 to 5 day or 1 to 2 week dynamic does allow 183.17 to hold weekly lows. And so I think that holding below 198.17, if you are short presently in the 198.17 to 200.11 region, and you're a 3 to 5 day swing trader, you're holding out for 183.17. Once we test 183.17, you can take profits on the short side and actually reverse and go long in anticipation of possible bullish rotation back into that 198.17 to 200.11 region. And certainly if we were to close below 183.17 within 3 to 5 days of that, we can anticipate 168.75. But I do see 168.75 as a 2 to 3 week target now below 198.17. Of course, if we close above 200.11, we reverse and go long. I'll get to that in a minute. But if you're short now, or if you're anticipating going short in this 198.17 to 200.11 region, you can, talking to 2 to 3 week swing traders, hold out for 168.75. 168.75 I have as a 4-star multi-week support level. This may well contain selling by that point in time through the rest of July, and from there we can round back up, possibly round back up to what is a descending long-term channel top at 210.29, and on the weekly chart, once again, 209.96 all week long. And certainly if we were to close below 168.75, that is your go-with sell signal as we move through the rest of the third quarter. Closing below 168.75, there would be no good reason to be long Tesla if your time horizon is anywhere from, 3 to 5 weeks out to 3 to 5 months, because inside of that range, inside of that time zone, I would expect this 115.02 descending channel top within, I'll say, 2 to 3 months or sooner of closing below 168.75. And that pretty much covers the downside. But I will say, once again, just know this 115.02 descending channel bottom is in reach by the end of the year, holding below this long-term channel top at 209.96. Now, the same channel top on the daily chart comes in at 210.29, but just know that by Tuesday, this 210.29 is already lower than the same formation on the weekly chart at 209.96. Let's cover the upside. And we do, of course, have 198.17 to 200.11. If we happen to push through that area today, we've got 209.96 on the weekly chart once again. Is it in reach today if we happen to push through? I mean, it is certainly possible. There's 210.29 on the daily chart. If we happen to open above 200.11, you should allow for 210.29 today. But under most circumstances, it would be a settlement today above 200.11 that would then signal this could be a 2 to 3 day move, could take into later week before reaching 210.29, which is 209.96 on the weekly chart and able to contain buying not only through through July, but quite possibly through the third quarter and into later year. If we were, and I think this is kind of a weekly settlement, I'll take this day by day. You'll be watching this, I assume, Tuesday, Wednesday, Thursday, and we'll see if the market closes above this daily version at 210.29 or during the week. I don't expect to see 210.29 once again unless we close today above 200.11. And then I think this is more like a 1 to 3 day move realistically to 209.96. This channel top dropping into the 209, 208, 207 area as we move into later week. But the weekly version, which is the one we really want to watch, is unchanged all week at 209.96, where if you're long, and I'm talking kind of like to 3 to 5 day swing traders. 3 to 5 day swing traders may well be short right now, as I mentioned at the opening of this video, anticipating 183.17. But, if we close today above 200.11, 3 to 5 day swing traders should reverse and go long. This is probably, with present volatility, just a 1 to 3 day pop to the upside before reaching 209.96. Where, short-term long positions can be liquidated and all time frames can go short at 209.96, whether that's day traders, 3 to 5 day swing traders, 2 to 3 week swing traders, once again, back to that channel support at 168.75. And 2 to 3 month, 3 to 5 month swing traders all the way south to 115.02 and dropping daily. Now, if we were to close above this 209.96 formation on Friday by a 1% degree, and we've already got that mapped out at 212.06. So a Friday settlement at 212.06 or higher would completely, negate the 1 year bear trend, would discontinue it. And with that, I would expect meaningful gains into later year. The 326.49 formation, then considered, I think that's a realistic 3 to 5 month possibility. It certainly could take longer, but if we settle Friday at 212.06 or higher, I'll no longer be talking longer term bear market, 1 year bear trend, but rather, the discontinuation of that and the emergence really of what I would call a 6 month bull move to 326.49, where this market, Tesla, can top out through the rest of the year and possibly through the first quarter of next. Of course, we would have a significant longer-term buy signal unfold again if we were to close above 326.49, but we'll take this one step at a time. Closing the week, I think any daily settlement above 209.96, there's no good reason to be short through the rest of the week. You then want to see how you may actually go long on an intra-week basis. Let's say that Thursday we close, Wednesday we close above 209.96. You may consider going long on that basis. We want to see it by a 1% margin. These tend to hold pretty well, the 1% margins in and of themselves. So let's say a Wednesday or Thursday settlement at 212.06 or higher is reason enough to enter a long position. Certainly reason enough to liquidate on the short side, but to also reverse and go long. Maybe you scale into a long position, buy a third or buy half of your core position, and then on Friday afternoon, if we're clearly trading at or above 212.06, you're all in on a longer term play to the upside. If you're an options trader, you may then reach for 330 strike out of the money calls. I would go a year out on that expiration, even though I don't think it'll take any longer than 6 months. This was a 6 month move here. from the January 23 low to the July 23 high. And so if we were to test 143.72, for instance, you could say the same because it's the same distance. But that's why I go with 3 to 5 months instead of 6 months, 3 to 5 months, because we've already accomplished probably 20% of that move and only can play that side of it if we close above 209.96. I think that pretty much summarizes it. I'm going to leave it at that for Monday's Tesla report. Please click like, share, subscribe. Check out wickedstocks.com. We offer 2 solid stock picks every week with detailed video analysis and daily analysis in the Triple Q and SPY. I'll be back tomorrow with Tuesday's Tesla, and you have a great day.